Lately, the SEC has had the crypto industry in its crosshairs, first forcing Kraken to pay a $30 million settlement and forcing them to stop their staking services. 2 days ago, they served Coinbase with a Wells notice, and yesterday, they put out an investor alert saying exercise caution with crypto asset securities. So what does all this mean? What is the SEC trying to accomplish? Why are they doing this when Coinbase has been in constant communication with them? And is this just political, or is this actually within the law? So to get to the bottom of this, I invited on attorney Aaron Kaplan to talk about it. Aaron Kaplan, attorney and co-CEO of Prometheum. Welcome to the show, sir.
Thanks for having me, Matt.
Absolutely. Look, the SEC has been making some bold moves against a lot of crypto companies, including Coinbase, as we saw their Wells notice the other day. What do you think the SEC is trying to accomplish with all of this?
I think the SEC is trying to protect the investing public. What we've seen historically is that a lot of these, the financial services in the crypto space are geared towards retail investors. And when a lot of the debacles happened in the last year, it was really the retail investor that was left holding the bag. I think as a result, the SEC has taken proactive measures to make sure that the investing public is protected.
And do you think that they're right when it comes to serving Coinbase with the Wells notice, when it comes to their staking services, their wallet, and so on and so forth? You said protecting investors. Coinbase has been trying to have a dialogue with the SEC for years, ever since their IPO. Also, they've been going back and forth, as Paul Grewal tweeted the other day. They went back and forth last year like 30 times and really has gotten no direction from them. Do you think that this is a just, notice to Coinbase?
I think the argument that the SEC has engaged with the SEC in regards to their IPO is completely separate to their business activities and their lines of regulated business. To go through a registration process such that you can raise capital through a public offering is different than getting the approval of your actual business activities and operations and getting licensed as a broker-dealer properly under the securities laws.
Okay, so what you're saying is that it doesn't matter if when they were talking to the SEC and they put that, say that they have a staking service and they put all these different products in there, they understood like how they were going to list coins on Coinbase. That's irrelevant to the listing process. It's about what they're doing on a day-to-day business practice.
I don't know if it's irrelevant. I just don't think it's at all dispositive. Essentially, in the offering process, in the capital raise, in the going public process, there was a approval process of the registration statement, of the actual documents and the disclosures there. That's different than being regulated under the securities laws as a broker-dealer and doing lines of business that are securities-related activities if you're not.
Go into that a little bit more. So, again, what do you think the SEC is trying to accomplish? You said protect the investors. However, the investors in Coinbase seems to be the safest place, at least for Americans at this point, to buy, sell, trade, hodl your crypto. What are they trying to accomplish?
I think that as the SEC has made clear beginning in July 2017 with the Dow report, many of the financial services related to crypto implicate the federal securities laws. And as such, people have to properly register as broker-dealers, depending on what their line of business is when providing such activities. Not just that, the chairman of the SEC has said that the overwhelming majority of digital assets are securities. Furthermore, there has been indication that's time's running out for virtual currency exchanges to register under the securities laws. I think everything has been clear across the board the way things are going, and I don't think that this is any sort of major surprise. Now, we need some sort of clarification as to the specifics of the Wells notice. They mention it goes after potentially the wallet activity or the staking activity or the asset listing activity. Now, it's hard to tell right now where the focus is, but obviously if the SEC were to be focusing on the virtual currency exchange and the potential operation of an unlicensed broker-dealer there, I think it would be obviously major news.
So all this can be corrected and rectified if Coinbase would just register as a securities broker-dealer? Is that what you're saying?
There's no silver bullet here. There's no panacea. Essentially, there is a process that will have to occur whereby, and this is speaking as an outsider, whereby just You'd have to review your operations, your technical abilities, and your engineering. You'd also have to review the licensing you're under. There's a lot of steps that would have to be taken. But what the SEC has made clear is that the overwhelming majority of financial services in the crypto space are securities activities, and as such regulated by the SEC. And in that case, the entities providing such services would have to be compliant and licensed under the securities laws.
It's interesting for you to say that there's no silver bullet, yet we still are trying to find a solution. It's like, hey, you need to do this, but you say there's no silver bullet. So is there actually no solution to this? And if there are unregistered securities, for example, say, there must be a process to, continue to do business, right? And so if Coinbase does this, then they should be fine. If the coins or whatever do the process, they should be fine. Is that not correct?
I think there is a process. I mean, the SEC has come out with the three-step release and the special purpose broker-dealer release, which was adopted into law thereafter in April 2021, which lays out how to compliantly trade and custody digital asset securities and basically the pathway forward towards achieving compliance. I understand it's not as easy of a path as necessarily operating as a money service bureau, as a traditional virtual currency exchange, and things will have to change. But I think it's all part of this maturity process that's ongoing and that's required in order to end the crypto winter.
So if there is this process, why do you think that people are not taking this process? Just for ease, or do you think that they just can't be compliant even if they tried?
There's probably a lot of different factors there. One, I think for a while, the path of least resistance was to not focus necessarily under compliance under the securities laws, but the paradigm shifted after FTX, and regulation came much more into focus. Beyond that, I think that it's a question of difficulty when it comes to how much operational changes would have to occur, how much licensing, how much effort would have to go into obtaining the proper licenses, how much technical changes would have to occur. It's a heavy lift. And then finally, I think that there is a contingent within the crypto universe that do have skeletons in their closets, and essentially, I don't know if they can achieve compliance.
How many coins, tokens, companies do you think would just go away if it's just, okay? Let me phrase it like this: Coinbase, the SEC, they talk. Coinbase says, okay, fine, SEC, you're right. We're going to do everything as you say. We're going to check all those boxes. What do you think percentage of coins, companies, unregistered securities, in air quotes, remain on their exchange? What does the space and the industry look like in the United States moving forward if the SEC gets their way?
I don't think everything is achieved at once. I think it's a sort of a gradual process. The first step would be to have proper licensing as to trading and custody venues under the securities laws. From there, it would be treating potentially digital assets as securities and trading them as securities compliantly with, the proper fair and orderly market mechanisms to ensure that trading is legitimate and has integrity, as is required under the securities laws. And then also on the custodial side, it would be probably a transition to what's called special purpose broker dealers, which is essentially going to be the securities licensing for blockchain custodians under the securities laws. That might be redundant, but
right. So no, I guess what I'm asking is, how does the environment change? Overnight. If this is it overnight? You said it's an ongoing process, but I mean, let's just say there's 100 coins on Coinbase. Do we go down to 20 that actually can meet these requirements? Do you think that the whole industry for Americans at least changes?
I don't know how it's going to be in terms of the number of assets they have listed.
Do you think it's going to be immediate? Like boom, we delist, or do you think it's going to be a gradual process of saying, oh, that one, okay, we have to delist, or that one, we have to delist, or that one, you better be compliant, you have 6 months?
I think it's just a question of the overall changing business landscape. I think that tokens will transition away from virtual currency exchanges to alternative trading systems, which are properly licensed under the securities laws, not just because it's a question of how to be compliant, but it's a question of where institutions and other significant investors will want to participate. They don't want to take on compliance risk. They don't want to take on regulatory risk themselves. They want a pathway to be able to do it properly. So I think that will drive where tokens move and how trading proceeds in that capacity as much as anything else.
Are you saying basically moving away from the existing or Coinbase as it exists now or Binance.us as it exists now to something like a Robinhood? Or do you think that there's different platforms there?
No, that's just a mechanism for the purchase and sale. It's not a mechanism for trading itself. That's sending orders to trade somewhere else. There still needs to be trading venues. So I think what will happen there is there will be alternative trading systems that provide the trading venues whereby the public can purchase and sell digital assets compliantly under the securities laws.
So what does that look like? I guess from a novice, somebody that isn't an insider understands how that's set up. Can you explain that a little bit? Like, what would that alternative system look like?
I mean, ATSs exist right now. There's just going to be, they exist now for equities. They also now are starting to exist for digital assets. Prometheum ATS, which is a subsidiary of the company that I'm the co-CEO of, Prometheum, essentially is licensed to trade digital asset securities through an ATS. And basically, I think that's where you'll see a lot of the trading transition as we're moving away from sort of the pre-FTX virtual currency trading model towards a regulated trading model under the securities laws.
How much do you think this is political or actual implementation of the law? And I mean this because there is definitely a lot of senators, congresspeople that are voicing their opinions about the digital asset space, and it seems as though that there is a political divide, at least here in the U.S., between the Republicans, the Democrats, of how this should proceed, and what does the structure look like? Do you think that this is political, or very much everybody had their lawyer and regulation hat on, and they're just trying to follow the letter of the law? Or is it both? I mean, both is an easy way to say it. Yeah, it's just both, but
After FTX, a lot of people had egg on their face, and there was much more politics involved, I would say, even though previously there was a lot of efforts made by SBF and his ilk to influence politics as well. So I think that, but going back to the question of whether this is political or this is just the application of the law, it's just the application of the law. And what the SEC, I believe, is attempting to do is to protect the investing public and to ensure that people can fairly and legitimately participate in the space. Now, what does that mean? It means that when you make or lose money in your digital asset or virtual currency account, it's based on your own investment decisions and not because the existing trading venue or custodian went belly up. And the best way to do that is to ensure that investors are properly protected, that there's fair and orderly markets, and that customers' assets are properly segregated and secured. And all those are required under the securities laws. Now, I think part of that process of achieving that is to have these enforcement actions to basically move the industry forward and ensure that the future of financial services in the crypto space is one that's regulated, where people can be properly protected and have feel that they can legitimately and fairly participate in the space.
Now, Aaron, you're obviously a business owner in the space. You are also an attorney. What do you think the industry looks like in the near future, going into, say, 2024, or our supposed, after the Bitcoin halving next bull run historically, but we don't know. Nothing's written in stone for what the future looks like. But what does it look like going forward?
I think the future will be bright as the crypto financial services ecosystem is replaced by a regulated one. where institutions can feel comfortable participating in, where they don't have to feel comfortable that there's regulatory risk or that they're going to have some sort of compliance issue, and where retail investors could feel like they could fairly trade and custody their assets. And I think that's happening right now. A lot of the weaker components within that ecosystem have been flushed out, and while it's led to some sort of drawback in certain components there will be those services that will be replaced by more legitimate, more properly regulated, and more, substantial institutions that have proper integrity and risk management and everything else that will allow sort of this, next crypto run to occur, or this next crypto spring to bloom.
You obviously have, your chips on a certain bet. You are running a regulated compliance service yourself, so you are saying this is going to be the future, and that's why you're putting your time, your money, your efforts into that. Is there some legitimacy to the maybe distrust of the regulated current traditional banking and financial system, where I guess an ideology was trying to break it, trying to innovate around it, trying to innovate better processes for that? And do you think that there's room for that? Is that something that you're trying to do, or is that just I don't really know what I'm trying to say here. What I'm trying to say is that there is an ideology that says the banking system, the financial system is flawed. Bitcoin is trying to fix that, but we need to be regulated. But then we have to be, it's part of all the traditional finance, and we're in the same boat. Do you think that there's a balance between that, and we have to, adjust, or do you think that we just keep going and moving forward with this, and see how everything ends up?
I think value or money, whether it's fiat or virtual, has always been a instrument of governments, and to think anything to the contrary sort of is a little bit out there, in my opinion. I also think that, like, in the space, particularly the crypto space, when you heard ideas like democratization of finance and all these nice cliches, a lot of that was just a means to perpetuate a scam on a larger group of people. And if you've read the reports of who were the most injured when all these, quote unquote, pseudo reputable institutions blew up, it was mom and pops. It was people in third world countries. Basically, they just expanded the scam to a larger group of people, and they used clever marketing to try to perpetuate that. So I don't know. I don't necessarily. I would hope that as Web3 develops, it's open to as many people as possible, and that I think the best way to do that, such that people can properly participate in the space, is to give them on and off ramps and forums for trading and custody of their assets that actually have integrity, and where they know they could be properly protected by some sort of law or regulatory framework. No. Anything to the contrary allows for the charlatans to rule the hen house.
I would assume a lot of people in the space would disagree with that. What would you say to them? You're wrong?
I think no. I think it's all part of a maturity process. Like, I think the thought process has already moved from where it was when 10 years ago in the space, where it was like cypherpunk, crypto anarchists, and then it switched a little bit more, and then the mentality is changing now. And I think if people really want significant institutional participation, if people want crypto to become like this massive asset class, which it is becoming, right, it needs to have a pathway where the larger major institutions could feel comfortable participating. And I don't know if they could do that unless there's some regulated framework there. So it's basically, you want this giant goal of crypto to be super big and like to basically grow it to be a super substantial asset class. But on the other side of that, you're not providing the means by which that could occur. It seems like you're cutting off your nose to spite your face there.
Aaron, I want to say thank you very much for coming on the show and discussing this. I hope you have a great day, and we will definitely talk again.
I appreciate it. Thanks, Matt.
Hey, everyone. The bull run is coming. It's coming quick, and you need to be up to date on everything that's happening in the Web3 space. So please follow us on Twitter and like, subscribe, share these videos so we can keep you up to date daily on Web3 news.